The question is like, if, I mean, a market can have one or two down sessions, which is normal. I mean, but it doesn't say that I have to trade or it has my name on it, you know? But let's see. I mean, let's look like, this is what I watch most of the, like all day anyways. We have a 21.3% decline. Okay. The first swing was 12.9%. We had a retracement here down with 6.6%. Now we had up for like what? 11.7%. Okay. So if we will take a measured move, will put us at 57.26. That will be the measured move from this low to this high to this higher low. Then this high, the second largest swing that we had here to the downside, which was a lower low, the high of that one is right there, 57.86. So this is our zone that we're approaching right now. So from here, we're not gonna focus on this low. Now our low is gonna be 51.01. So whatever the price is gonna starting to come off, back off from here, which is gonna run our retracements from the high from here, from this low, not this low. Remember, the swing is up. You don't want to come down this much because this was the downswing. Remember this color right here? I'm going to focus on the green part. Wherever you had the retracement here at the low, that's where you're going to run your fibs from here. There we're going to find support here to see where the price is going to find, where the price will manage to find support. So we'll see what I mean. I will. So here's the thing, okay? I understand here. This is a software that I use, right? And there is another guy, Scotty, that you use as well. I know some of you wants to learn swing trading. I get that. It's good, it's great, but some of you don't have Optima. This is not a cheap software. Let's put it this way. It's expensive. This is even more money than MotiveWave, to be honest. MotiveWave is just like a one-time price that you pay, and you can just connect free Schwab data, like the Thinkorswim data with MotiveWave, and you have it. You have it for life because if you buy the lifetime license. The Optima is you pay like one time 2,500 bucks to get yourself whatever this enterprise software, not the enterprise, the professional version. And then you gotta have to get data provider right there. So the data provider you have to pull data, all right? It's not gonna work on its own. So you need to create that connection, which is I have this IQ feed. So this one costs like with indexes and the exchange fees and it's like 120 bucks, I believe. Yeah, $120 a month. And then on top of it, Optima charges like how much do they charge? 100 something every month that you pay. Let me see. Invoice 115. Okay, so it's 115 for Optima, 120 for the data. Okay. So you're talking, I don't know, 235, 40 bucks a month, every single month to run this thing. This is not, it's the same price. You can look it up on a Thinkorswim for free because it comes. But, it just, The only thing that I can recommend or tell you is that any stock that you wanted to look, I can always pull it up. It's not a problem. Just mark the highs and lows. Every time when you see a swing, you know exactly where the swing ended before and after. Just mark that thing on your chart. You know exactly where the high was, where the low is. If I would have somebody that would have shown me this, I would just simply go to a price level and just mark that thing on a Thinkorswim chart. So and then I have it. So what you're looking for is to see if you can take out the high of the previous swing high. That's it. And then from there, I can always project the upside for you. But if you're sitting here, if you have an open trade, and there's no point for you to look anything above this print. Okay. There's absolutely no way that you trying to like, oh, I want to go here. Well, you'll get there. That's not a problem. You need to make sure the price makes a higher high first. Once that breaks, the alert that you will set, a price level or a price alert, is that's when you project the upside from here. You need the price to make the higher high to take out the previous swing high first. But if we're just sitting here and you look in here, why are you doing this thing to yourself? Because you just like mentally like, oh yeah, we're just gonna go here. You don't know that, so because if the price can come down here, this is just not the initial low, but the price can come up here like this for 2 days, come down like this and come down back again. So this entire swing will extend like this to the downside. And now you have this low. So you sit in here with that position right here, and you're like, oh well, the price just made another low. But as long as you have your swing is up, you're fine until this thing turns red. You're out of the trade. So it's pretty simple, right? That's why you can do a 2 bar swing that will have more. um let's do this. So here's a difference between 2 and 3. This is a 3 bar swing, right? A 3 bar swing is looking for a 3 higher bars. Once you will have 3 bars that takes out 1, 2, and 3, makes 3 higher highs. Okay. That the swing turns up. So when you go back here, I'm going to spend a little bit of time here because somebody was asking me, I want to learn swing trading. So show you a few things. This is a 3 bar swing. Okay. Uh, let's do this here. So now if you want to go back to a 2 bar, watch what happens. You see how it changes? So now if you want to go to a smaller time frame, so this is your 1 hour time window. So the 1 hour time frame, this is a 2 bar swing. Okay. And now as soon as you're gonna go back here to 3, you see, I mean, I've tried 2 bars for a long time. I just really didn't like it because it gives you a lot of false signals. Now you go back to a 15-minute time frame. A 15 minutes time frame, this is a 3, this is a 2. You see the difference? Look how many highs and lows you have now. You think this is easy to trade, or you think this is easy to trade? Look how many lows and highs you have here, how many swings because they're changing so fast. So the three is going to give you a much better signals and much better read on a price because it's waiting for those three lows: outside bar, lower bar, swing turn down. So when the swing turns back up, so now what you're looking for, now your swing is down. Now you wait, this is inside bar, higher bar, inside bar, outside bar, and the swing is still down. So now you have these three bars, one, two, and three, that confirm on this bar that this thing turned green. Now the swing turned up after 4 hours. Sorry, after 1 hour. So you have 15 minutes here, 15 minutes that is half an hour, 45 minutes and 1 hour. So 1 hour, the swing turned back up. So what is your first target that you're looking for now? This. So now you want to rally from 55-ish, like 30-ish, like whatever the high is, 55.27, which is right there of this high, to this. Nobody knows that's going to happen. Okay? Nobody knows that. So when this swing gets taken out, the previous one, so how do you project the upside? You simply take the extension tool. You take this low, which was that was the low of the swing, right? That's when the swing turned down. So you take this low to this high, project it from this low. That's your targets to the upside. So what happened here now? So this low was placed, swing turned back, swing turned up, took out the previous swing high. Target was 55.98, 56.22, 56.53, and 56.92. So these are the targets were to the upside of this swing. We went up here, 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 and then from here, we recorded another 3 bars to the downside. Swing turned back down again. Then it went back up again. Then it came down again, So that's what swing trading is. No labeling, okay? You just focus on the high and lows. Is it easy? I mean, to me it is. Because I can count this thing in my head right away. If I really want to label something, I can read a chart and I can just know like where to put one and where to put two and three. I can do all that, but it's just a matter of like going to a motive wave and then just that just it just takes time. So I don't like, I mean, I if you look at the channel here, it's where is that thing went? Right there. 2 bar swing. These swings are more sensitive to price changes and can be used to identify shorter term trends and potential reversals. They're based on consecutive bars with higher highs for uptrends and lower highs for downtrends. A 3 bar swing. These swings provides more filtered view of the trend and are less prone to fall signals, which is true. They require 3 consecutive bars with the same trend direction to confirm a swing, making them more reliable for identifying major trends. How to use them? Both 2 bars and 3 bar swing identify potential, so you can do all that. So this is what the two and three does. The two is just gonna this is crazy, you know. So it all depends. I mean, you can go to a 5 minute chart. You This is if you scalping, like, imagine trading this, you know. So here, like, you have an upswing here, you have a downswing, and then the swing gets confirmed here when it takes out this high, because now you have one, two, three bars, because that's where the bar just pushed it up to, to the previous swing high. And now this is the upside that you got. Well, because the question is, when the price is here, you don't know the price will stop here. It could go up all the way up here as well. We don't know that. So you just simply, all you gotta have to just, most of the time that I use is just the extension tool. It's just to see, like, okay, what will be the upside if I'd be looking for based off this swing right there. That's what it is. So if I think it's a much easy, not, I want to say easy, nothing is easy. Much better way to trade, you know. It cuts all the noise, and um that's just the 1 hour here. I mean, daily, yeah, definitely it's a much bigger time frame, and it just, because the thing is this, that once the swing turns up, especially on a daily and a weekly, it doesn't turn back down instantly. Keep that thing in mind. Because if it took 3 days for swing to turn up, now you need 3 down days, meaning that the price has to make 3 lower lows, lower bars, for the swing to turn back down. You know, the tricky part is this: inside bar. Gann, when he did all the swing trading, okay, the two bars that he has, a lot of trade. I don't know a lot how many people actually do swing trading, like based off what I'm showing you here. The most tricky part about swing trading is, do you count an inside bar as a bar or not? Which is right there. There's few of them. Do you count this? Because you need to count 3 bars, right? So do you count this an inside day or an inside bar as a part of the higher bar or a lower bar? If you don't, like, watch this. See what happened here? If I take out, if I, oh my God, go like this, because I want to go to a daily 3 bar. Okay, this is the 3 bar. So if I go with the 3 bars, which I always use, if I don't count the inside, see, it says right there, use inside. If I don't count the inside, look what happens. So one swing to the upside. If I count the inside, you see, Elliott has those waves, right? You're counting waves. Here, you're counting bars. It's the same concept. So Elliott has a lot of similarities compared to the Gann, though. But you're gonna learn swing trading. It's gonna be a, like, after years of practicing Elliott wave, swing trading is gonna become like a piece of cake for you. For me, is like technical point of view, not just for like placing trades and stuff. It's just this is like nothing because I've spent so many years with Elliott Wave. When I got myself into a swing trading, it's just like this is like a piece of cake for me, you know? Because there you like counting waves up and down, you know, five up, three down, five, this and that. Like here it's just like you just basically counting bars. It's like this is so easy. So okay, the point was, do you count an inside day or not as a part of a three bars? So in this case here, if we don't, this is just the one swing. So the swing here changes right there because that's the low, higher bar, higher bar. Now you're not counting this one because that was the inside bar. See, the swing still stays down. Now you have higher bar, another higher bar, then you have another down, inside day. You see, you're just not getting those three higher bars in a row. So in that case, the swing still telling you, it still shows to the downside, even the fact that the price is going to the upside. You see how tricky that thing is, right? The inside bar, I always tell you all the time. What did I say? Do not trade inside bar. One thing, never ever average your position in an inside day. Just leave the day, leave the position the way it is, and just deal with the next day, and see how the price opens and the next day. Do not trade inside days. They are they are considered as a neutral bars. The GAN says the same thing. You have to just wait for the next bar to open for you to see where the how the swing is going and which direction the swing is going to go. Every single time I see an inside day, I mean, I will look for other stocks that are not in inside day, but I will not touch that stock. If I'm in a position that happens to have an inside week, or it will have an inside day, either it could be a Tuesday, it could be a Thursday, it could be a Friday, I'll just leave the way it is. There's nothing I can do to it because this is the most tricky bar that comes in between the decision point that where you have no decisions are being made. That's where the buyers and sellers just are like, okay, screw it. I don't know which way to run. Should I just go back and attack the lows, or should I just go back and rip back to the new highs? So those are neutral days. So don't act on those ones and just sit on your hands and just find something else to do. Now, if you count this, now it changes. Okay, so this is the difference I just wanted to show you when we make you a point on the inside day. Do not trade inside days as long as you're going to be trading. So inside day, if we don't count the inside day, okay, and then the swing turns instead of here, the it turns up here. Even the swing is up here anyways because we have three bars now, 1, 2, and 3. Now we had then the next day we had a higher bar, another higher bar. So now for the downside, you see now we're counting this as a 1, this is a 2, that's as a 3. The swing turns back down, which is right here. It's a little tricky because it's all about this. You know, do you count this thing as a part of it? I talked to Optima and the guy that that I usually talk to all the time. It's like when I was when I was like, like into the swings and stuff, I said, do you count this thing? He said, like, you should, you know. It's like use he said like you should count as an inside day as a bar, as a part of your counting. Because if you don't, because then you just have to wait for a long time for the swing to actually give you the, and you just miss out on a lot of price action. In this case here, you have, like, if the price, whatever the retracement here on the downswing, what we're looking for, and now we see we're trying to protect our lows, right? And now we're gonna see, like, okay, where we can go long after having a high swing to see if we can take out the previous swing high. That's it. That's all the trade is based on. That's what I do all day. I'm hunting trades in here after an upswing. So when this is an S&P, so every time we're right here. So we're gonna go back to these are all the previous swings were. So then every time when you had swing that put a low here, you just mark those levels because they're the ones that's going to act as a resistance here on the way up. Remember, the broken support act as a resistance to the upside, and then the broken resistance act as a support to the downside. It's always opposite. So you just simply mark, like, you don't know, like, okay, well, where are we going to go? Where are we going? What is our upside? How do we project upside? So you can just simply, you can mark this. So what happened here last time, right? So we had this low, price was making a higher highs and higher lows. So we made a higher high here. Now we came back to this 57.73, as you can see, and then we just took that flush down. That came after, way after. But then we just came back down here. My market went right back here to the same level, as you can see. And then from here, it took that flush. That's that swing right there. So there's a lot of action happened here at this low, as you can see. First time we had a break, retest, massive flush down. And now we're coming right back near the 5,700 yesterday, but 57.70, that's a 73 point to the upside. So we're going to watch this area. So this is only a swing low that we're looking at. So what else we can do? We can simply draw our fibs. We can take this high to this low. There comes our fibs. We can take this low to this high, because our high swing is up here anyways, right? Is this. You see, what are you trying to do now? You're trying to find a cluster of fibs that's trying to stack and come real close to each other. You get rid of all these, so we took out this swing high. So what will be our zones? 1, 2, 3. See how close these prints are from these swing highs and lows? That's how you build zones to the upside. That doesn't mean it's gonna hit them almost to the penny, but it can. But that's your upside. But as long as the swing is up, you should be looking up. But now we're cannot stand this market because it's been up for 9 days in a row. It's crawling and under everybody's skin right now. Or a lot of people are stuck in their positions because they're thinking that there's going to be another flush down. Well, nobody knows that. And but fighting an upswing when the market is like, there is no point to look anything to the downside. We will look to the downside when the swing will turn direction, meaning that we're going to have 3 bars to the downside. That's when the swing will turn direction. So if the 3 bars will turn lower, that doesn't mean it's going to rip 3 bars right back up either. So if you want to look at a shorter time scale, there's now you have down, 2, 3, 4. That's 4 days. That's 4 days of 4 bars to the downside. And then you have one higher bar and the week is over. Same thing here. You got 1, 2, 3, 4, 5. That's a 1 week of price action. So just you, because on a daily, you're just going to count 1 bar for each day. So for this week, we had 1, 2, 3, 4, 5. That's it. That's your whole week that we just had from Monday to Friday. 1, 2, 3, 4, 5. You're just counting bars. So there's no point for, I mean, you know, should we put a hedge on and I mean, we can do it. I mean, don't get me wrong. I love to trade, but I don't like to overtrade. If we can have a 300-point drop on Monday, if I don't have position open, it doesn't mean I'm just going to cry a river that I don't have a position on. This is not how I look at trading. If the swing will turn down, that will take 3 days. So, okay, let's count days now. So Monday we need a lower bar. Tuesday we need a lower bar. Wednesday we need another lower bar. So we need 3 down days for the swing to turn back down. So when that happens, okay, then we're gonna see like, okay, fine. Now we have our low, this swing high that will act as what? Support, right? That was a resistance. That's when the swing that the price took out the previous swing. So what happens here? That will become our support against this low. So we're gonna forget about all this part here. Now what we're looking for, retracements. Now we're gonna run retracements between this part, not this one. Now this one doesn't come in play because that's where the price failed, and now it's starting to, for 3 down days, the price is making lower lows. So that's what the swing trading and direction is. You're just counting bars each day. So when you go back to a smaller time frame, now you're counting the number of bars. You need to count three bars. Shorter the time scale is, a lot more swings are gonna be. 1 hour time frame, you have 3 hours of a trade for swing for the swing to turn direction. So there's a lot of other ways we can find. Now we look for opportunities like where we can enter, where we can exit. That's what it is. The only thing that I don't like about swing trading compared to Elliott wave, that swings let you use wide stops. Okay. So the swing trading has much wider stops compared to a wave structure. So that's the only difference, because price is a price. Risk will be the same way if you define it both ways. So if you put a 2000 on Elliott and 2000 on swing count, the amount of time the swing will take for you to turn direction is gonna be on a much bigger retracement compared to a wave count. So that's the only thing I would, for risk uh, point of view. I mean, I would, if I think that using a larger, because the thing is this now, let's say You got For risk point of view, Elliott wave is the clear winner. There's no doubt. There's no denial because like Elliott wave is like if you have five waves up and if you have two down, which just has the same structure like this, right? So you have an upswing and you have a downswing, right? So in this case right there, you're counting five waves to the upside and three waves to the downside, and you're trying to find entries here against this low, right? Because you don't want to have wave two, because now Elliott said the same thing. Wave two cannot retrace the origin of where the wave count starts, right? From the low. So same thing here. So once you have a swing to the upside, one you have the retracement, just like the Elliott wave on wave two, you don't want to have this retracement coming all the way back down here. So every time when you're trying to find retracement in to the swing that is coming down against the swing that is to the upside, is gonna have a wide window. What I mean by that is this: you take this high to this low. That's a typical retracement that you everybody uses. Now the funny part is this: that you see this high right there compared to this high, and look where the swing where it marked the high of that swing. Not here. Why is not here? Because it's only two bars. We need three. Same thing in a wave one. We need five. So in this case, where do we come down? All the way down here. So we would have drawn a wave count. When a wave count, we just went over it before. We don't have five waves to the upside. So that we don't have five waves to the upside, a swing is not putting a swing up here either because it doesn't have three bars to the upside either. You see how they works uh, side by side. So it marked the high here. I cannot make a diagonal here either in an Elliott wave because it's going to be a truncation here. So that doesn't count. So I went down here, make this wave a truncation on the wave count for this move to the upside. Now, why did I do that? Because I follow a 1 hour chart, not this right here. When I saw this, a failed swing, that didn't happen. That doesn't mark the failed here unless this high gets taken out. When I saw this spike right there, I was like, said, let's go long. I've been long for 2 weeks, as you guys all know that. I said, let's just stay long now. This is just a failed swing. The 1 hour is just almost like with 2 weeks of price action right here on one. It's the same thing as I do in a wave count all the time. Remember, I always stay on a 1 hour time frame. Fail swings have Now this is not a 3 bar swing though. This is a volatility swing. There are four type of different swings though. You keep that thing in mind. Elliott is only one way. Swing goes four ways. 3 bars, volatility swings, percentage swings, and then you have the dollar swings. You have four different kinds. So now you gotta have to decide like, okay, well, which one you want to learn now? It's a technicals are it's a huge learning game. I mean, you gotta have to put hours and days and weeks and years to learn and practice something. This is not something you're just gonna adapt like in a couple weeks. Like, okay, fine, I know. No, absolutely not. You need to adapt one strategy, okay? And then you just have to focus on that strategy alone. Now, if you switch in one to another, and you're first of all, you're not fully focused. Second thing is you haven't even made up your mind, okay? And you just like, I want to do Elliott, or I want to do swing, I want to take a signal, I want to do moving averages, I want to do this. You're just like literally all over the place. That's not, you can trade. It's not, you don't even know what to like how to structure and what to look on a chart if you're trying to trade a price. You need to adapt one thing. I'm a little bit crazy because I just I've done Elliott for so many years. I got bored. Then I went to a swing trading. I might throw this one out in a couple of years. Might find something else. It's just the way I am. You know, just I'm gonna start something and I'm gonna get to the bottom of that thing, and then I'm gonna get to that level, and there's not gonna be nothing left for me. I was like, okay, that's it. I just like Elliott right now. I mean, don't get me wrong, I love it, but I don't want to even do it. I was just bored. I'm done. I've done from currency market to a stock market. I'm just too boring. Just same labeling over and over and over again, but I can't get rid of it either. So, anyways, this is where the truncation is. This is when you notice that what I did here is this. Because when I'm making this wave count, I have this in front of my face all day. So that's how I structure it. So like, okay, I'm going to start the wave count not from this low, from here. I can just put one here, two here, and then three. It's exactly the same thing that I'm doing here. One, two, and three. Now, what are my chances to be wrong? Pretty less because I want to stay long now, right? Because now I have two 1 hour time frame. This is a 30-minute, same thing. Of working side by side. So my odds of being to be wrong is pretty low. Because if the swing is going to turn direction to the downside, well, I will adjust the wave count. So this is why I always tells you that this comes first, then the wave count. So if I have this, which is the same 1, 2, 3, so does it look any different than a wave count? Just think about it for a second. Does it look any different than a wave count? Do you think I've done the same thing on a motive wave? Well, I can just do it all here. I don't have to count nothing here. Let this thing work. So now on a 1 hour time frame on S&P cash, where is our upside? You take the swing low to this one, projected from this low. That's your upside zone targets. So you see, like, if I put a 3 bar here, look at that. Swings up and down, up and down, up and down. Now the thing is, like, you don't know where that second swing will end, but that's the volatility swing. The number two has to stay above this low. But in the meantime, when you in a 3 bars swing, you have multiple swings. And down. So volatility is not, I mean, just like an excellent way to look at the price to the upside or to the downside based on the swing direction. But for using, let's say, like a stop loss or something, it's going to be massive, you know? So like it started here to the downside, one, two, and three, four and five. You got a fail swing here. Now you got one, two, and now we're up in three. We're gonna set back in a four, then we're gonna go five and six and seven, eight, and then the sequence just goes on and on and on until it fails. But at the same time, the three bar, and if I change this thing to a two bar, it just, you see, there's so many ways to trade, but you don't need to do all this. Okay. I don't want to confuse you showing you 10 different things. You have to understand one thing. Okay. Some of you who don't have a lot of experience and some of you are into a learning curve, they're trying to learn. You don't compare yourself to me, what I know, or compared to what you know. You have a lot more to learn compared to what I want, what I will, what I'm learning right now. But I try to learn something new every day. It's just my thing. I want to learn something, as little as possible, but has to be something new that I don't know. So I'm always in a hunt mode, always looking. So this is what I'm still working on it. Still, this is the band that I'm making right there called Fib Pivot right there. So this band right there, so, like I'm using those S1, S2, S3, and R1, 2, and 3. That's from the Schwab platform. And the Schwab platform has that pivot, and then you have SR1, 2, 3, 3. It doesn't even have 4. I put a 4 here on this one, but I'm trying to make this thing based off the previous swing where it changes, but the fib ratios instead of the high and lows of the previous day. Those pivot levels on Schwab, a lot of platform has it as well. I think well, some of you guys have the same thing. They're all based off the previous high and day. I'm sorry, high and low. What I'm doing here is more like using ratios. Like I love fibs. I trade off fibs all day. So just like the band, like 1 hour, I think we can try this thing on a smaller smaller time frame as, oh boy, smaller time frame as well. But here is like here's a Tesla, right? I'm just gonna show you. Then I'm gonna go there because I'm still working on this. It's not done yet. So here's a 3 bar swing. So I had this band yesterday. Well, because we have a trade open, and I know our pivot was 283, and which is right here, and then our first upside was 287.95. That hit here at this bar, as you can see, and then it flushes back down. And then we had a massive, like a lower bar here. Then we managed to go up. So then from here, I was looking at that 290.56 and then 294.78. So these are the band that look at the high yesterday, 294.78. And you, okay, how can you beat that? So this is what I am working on since last week. So then we just backed off yesterday. This is a 1 hour chart. So I think we're gonna do good on this one, just to find ourselves good entries, exits, take profit zones that we could be in a trade that where we would, look to book profits. Um, what I see is like the, I mean, even the fact that the stock does make a move lower, most likely is gonna stop here. So we'll see. It's gonna take a little more time for me to. I gotta some of them are. I was trying to compare um, with Schwab those because I had those screens levels. I think did I delete those ones yesterday? Yeah, I did. Ugh. I always do because right after the close, I always try not to forget to delete those levels off from here. I don't want to get this thing carried over the next day and somebody looked at them and is that would be a disaster. Um, Whatever that thing, I gotta open up that thing. So I was just trying to compare, like, okay, if they had this pivot, what is their S1, sorry, R1, R2, and R3? Because what I've noticed, like all this time, there's a lot of time if the price gets to S1, but it gets like I'm just what I'm trying to compare is that when the price gets here to this S2, sorry, the R2 number, because that's the R, that's the S to the downside from this yellow pivot line. And it's a lot of time that price don't really hit that. But that's what I'm trying to structure these fibs, the extensions, to see if we can get these highs and lows, as long as our swing is right in the same direction. So in this case right there, the swing was up, right, in the to the upside because right this is where the swing got turned direction. So you have one, two, and three because we're counting those inside hourly bars. So because now we're going to a much smaller time frame. Now you gotta count 1 hour bars, and the swing turns up here, kind of went sideways for 2 more hours, and that's when it got a pop right there. So that's 1 hour for one candle, and then from there. So that's what did I booked? Yeah, right there. So I booked 735 from 585. So I did that one. I'll just leave some there. Yeah, this is exactly what I booked it right there. So like I'm out. So I'll leave the other half and see how it goes. The wave con is a challenge. There's I mean the only way a good thing that I know swing trading, there is absolutely not a chance that you can count this mess on on a wave count. I have this thing here. I have no idea. What it just this was the a really go back here. This was really good that we could have a five-way move, but then this low right there is a new low. So you cannot do a 1-2. I would love to do that and then just try to count this when we need five. So if we do the same thing here, 1, 2, 3, that's a three-way move. We cannot have five because we're missing four. So the only way to go is to count this thing as a diagonal. There's no other way we can do it. But still had a lot of work to do. So we need 1, 2, 3, and this is what it is. 4, 5, something it just it's very difficult. I was like, screw that. I was like 1 hour is like I'll take a shot here. So that's what I got in. So I'd rather just take the swings over a wave structure. The wave structure, I mean, for me, I can't put this thing. Um, even swings are so damn choppy. Look how narrow these swings are. Did you talk to mom? Where is she? Oh, I have to just you tell. No, did you talk to her? Oh yeah, we're going now because we're gonna go pick up some food. We're not gonna eat it now. We're gonna eat it at like 12 at his house because he has testing. We're not gonna eat it in the morning. Okay, call your mom. So then it just like you see like how narrow these swings are, very small, you know. It's not something like at least NVIDIA is a little better. Is it a two or a three? Three. It's a little better. I mean, still can keep you in for like couple days. Um, this is a tough read. It'll take time, but something to count. You see, I just that's what I this down this new low right there was just like that would be really nice. You see, like a one, two, three, four, five. You can count five here. One, two, three, four, five. But we can't have two goes below that one. No way. So even here, like just you see the high here. It's gonna take time. So don't ask me for a wave count on on a Tesla because it's just we're gonna. I mean, we'll trade. I mean, I can, as I said, I trade from the swings anyway. I care less about wave count. So we can just trade off from here. It's not a big deal. So we have swing here. We can use a weave up off from this low, this swing low. There you go. So we stop right there, the weave up yesterday. So that's what I use most of the time. Swing, weave ups. I don't even care about moving averages to be honest. But 200 on a daily is a very important one. And and look what this stock is actually did all week. Tesla is fighting that 200. Look at this. So look how so this is the whole week. Tesla traded. This 200 EMA is sitting at 286.95. False break, inside day, choppy. I wouldn't even touch that one. So if anybody who is thinking that where should be, did you talk to her? So then this is the high. So a lot of some a lot of you traders are thinking like, oh yeah, you get this high like this and this is a breakout. Absolutely not. That's not what you call a breakout. You need something like this. Do you see anything here like this? Show me one open, a high and a low, open and close above this print. Do you see any candle here? You don't. So even the fact yesterday, well, look where we close. Look at the low is. So that's the low, that's the high as an open and a close. That doesn't mean that it's not gonna break. It will break. It's just fighting this because when you uh, break this 200, which one? What has happened here? Here. That was what? February of 2025. I mean, it kind of moved, not a much. From 2 or 3 months can move like 5, 6 points or whatever. Not moving is based off the 200 bars. Was back here in February. Now we're in May, and we came all the way down here, managed to rally it all the way back up, close to it, and then we got another flush down, and now we're just look where the swing ended here, not here, off the lows. Now, if I do don't count the inside day, look, yeah, inside day you gotta count them. There's no otherwise. You just either married to the trade or yeah, you need a swing low. It's a part of it's a very tricky bar. Now this and the this one. These are reversal bars. We want to go up, we need green. You position something to the downside, you hope for the red ones. One after another after another. That's it. That's your trading. Higher bars, lower bars. When you come into an inside day, you take a break. Don't do anything. Sit back and wait for the next bar. This one right there is the one that you watch closely. This is called 2-1 because it Gulf to the previous day, previous bar, high and low. It's a very this is all I know. I mean, I know a few of those doji and all those other funny looking candle, but that's it. I don't have any other. This is a simple way to read a price. Higher bar, lower bar, inside, outside. Done. There's no fifth, sixth, seventh bar. It's 4 bars. Um, I don't know. I mean, can we do this? That's no, because this is diagonal wave 5. Yeah, no, didn't make a new high. Let's leave it like this. Doesn't matter. If this is gonna be a 5, then we're gonna have another 3 down after this. That one right there has to find who knows what where it's gonna end. The 2 versus 1. That will take another week or two. And then from here, we're gonna defend this low against whatever the high is gonna be. So that's what we're gonna look for. Then from here, we need 8 swings. 5 here, 3 down, and then we will look for the upside. Something like this. And whatever the 2 versus 1 will come, it can come all the way back down to 7, 8.6 as well. So that's, yeah, 2 is always. So it depends. The A, then we'll look at the B, then we measure this along with this to see, and then we'll see if we can manage to make a high. I think it's gonna be, but the thing is, this freaking stock just doesn't have any good news. Horrible freaking earnings, and the stock is still managed to go up. The ones that reported good are the ones that taken a punishment. The worst ones are the ones that trying to move. It's just a lot of like negativity is all I think is fully baked in now into a stock. Yeah, it's gonna take time. Um, how did we end the week? Go back here. Here's the daily swings all up. Um, Look at the time duration of S&P cash and the Qs, and especially look at the rats. Talk about this. So you're talking, look at the time duration of of an upswing of on IWM. And it's still going. 17.2. Um, Compared to this one is a little late, so this has saved us, man. Seriously, I'm so thankful. Years and years of my um the work that I put into this thing to make this one, and man, just it fails. I'm well aware of it, but you know what? This time definitely kept me on the right side the last 2 weeks. I'm just um I saw this one and I was like, even the fact that the last one was back here, we still gotta manage to get an upside. You don't get that get them that often. Mm, And I know all the one here, one here. I was like, just go long. Worst case, we can have another down 2 days. Just stay long. Let's buy some risk to the upside. Weekly time frame is even more interesting. Look at this. I've never seen it. I have never seen this thing on a weekly that just going one after another. This is failed. Not this one. Look at this three. I was like, I mean, we're already down 21. I mean, gotta just stay long, you know? So it definitely helps. Definitely helps, trust me. I wouldn't have this. I would be still like, I don't know, do we have any more lows? This is a very good mean reversion signal. Very good one. So see the weekly swing is still down compared to the all the other three. It's very odd. Value is not really out moving much. The reason why is this. Show you the right there. See the growth. How can we bearish on a market? Look at the growth. How does it rip into the upside? Look at the value. That's why the weekly swing is down. The value is underperforming compared to the growth because people mostly, they jumped on the growth stocks first for any sort of a rebound for the market to rally. How you think markets are going to rally is, you have to bet on the mega growth. Yeah, growth is a play right now. It's right here. Using insight. Yeah, I gotta use insight. Because I moved this one. See, it's gonna change. Because sometimes I kind of look at both ways because if I want to count inside day or don't want to count inside day, but that's better. Do I have this as I change this one? That's why. This you can shade this one. There you go. Good. And, yeah. Um, let's see. It's a new month. How are you looking? We already have a higher bar for the month as of yesterday. Okay. And the monthly swing, I mean, that's a very long time, anyways. What I was looking at, few things that first is this. So it has been what three negative point 0.5, sorry, -5, -8, -15. So I have three of them here. It's the same three here. I was like, well, I don't think we're going four after this pin bar that we had here. So we already have a higher bar for the month. So yes, we're all well aware of it. There is going to be a retracement, this and this. It's just a matter of like, where are we going to find retracement down here? So we're just going to run our fibs when our daily swing will turn down. So that'll take a few days if that would happen. Okay. So we have a higher bar, which is a good sign. May performance, the seasonality looks good. Um, Looking at here, the same thing, how the year's been going. January was up, and then three down months. Now we're up in May. Um, so we'll see. Um, I don't I don't know if May is gonna go red. I mean, that would be four in a row. But that doesn't reflect that thing on a price because once the bar turns green, it's just gonna stay green for the whole month. It's just a matter of what the high is gonna be and where the close is gonna be. It already uh, um, took out this 56.79, the previous month high. Let's look at overall seasonality. May looks good. I know it's not perfectly playing out, especially the last 3 months. April was the second strongest month of the year after November, as you can see, since 75. But it happened to be the it's a little bit down, but it has April is just literally data damage. Oh, nobody can expect these rebound, but at the same time, the pace, the market that we're in, how news driven these tweets and all that kind of stuff. It's just crazy. It is crazy. And it's just, I think the next 4 years, we just gotta have to get used to it. There's gonna be a speed bumps. Like, as always, we had a pretty smooth ride here the last 2 years, as you can see. One here and one here with Biden. After this bear market, I mean, I don't know who in the world even called this a bear market. We're down only 3% of the from the year, of the year. So, well, we're gonna go back to the highs. We're gonna be, I just we'll get to that part. That's just not just we're just gonna take it day by day. That's all. Um, Netflix, Beast, doing good. Microsoft looks good. See, horrible 5 months in a row. Just man, Microsoft finally caught a break. 5 months for this stock. Meta looks okay, you know. See, same 3 down months. Yeah, it's a pretty for Mag 7 for stocks to be down for 3 months. That's kind of too much. Too much. Sectors after two is just no way. I gotta act on a third one. Um, Google kind of on a flat line. Amazon doesn't look good. Seasonality looks bad. Same deal. 3 down months. Earnings came. Bit of a fly. It's circling around that 180 mark, 80, 180, 189. I think that most people are betting on that 200, but now Bezos is dumping shares because he got to pay for his wedding. So there's always something. Nvidia, bit of a slow start here. Nvidia is gonna take off. I like the look of Nvidia. We're gonna go there in a second. I have a trade open anyways. Right here. This is one we're tracking. Hang on, just we're gonna come back here. Um, Nvidia is fine. Apple. Apple was down. Apple was up for 8 days, a day before earnings. So Apple is fine. Tesla. This stock just not gonna seasonality. Look at this. Until the 20th or so. It's a very, I don't know, I might just exit the trade, just sit back on Tesla, to be honest, just find something else. It's just, I mean, swing is okay. We'll swing it, but a wave structure, this just doesn't. I like to see multiple odds, some to say like, okay, yes, not I don't have a like and at least we're just gonna wait. That's all it is. We need 8 swings off the lows and a wave count if we're like really gonna get Mars. We can do a swing trading. That's fine. It doesn't not everything has to be labeled anyways. Utilities looks bad. So utility looks bad. That's a defensive sector. Consumer staples. That's the one I have that app that I were holding that trade. I like that. I think it's a little cute little setup. We'll see if it's gonna break out or not. We'll find out. That's a consumer staple stock. Real estate doesn't look good at all this month. Something to watch. The real estate. Same massive, huge pin bar. Financials are the same thing. They see just little kind of again the last 3 months the seasonality is not playing out. Okay, so you gotta have to keep one thing in mind that there is not, I don't know, if it's a 50-50 chance that is gonna play out, or it might not play out. Because of the last 3 months, I think these market makers, they become really cute. They noticed and realized that a lot of people are starting to compare seasonality, and that's just not the part of the trading and stuff, like how it used to. Because market has the data, right? That we can all collect, we can all see like what happened before this and that. And it has the data that collects over time, years after years after years, and then it just has the track record of being perform like that certain month to be one of the strongest month. But then if you notice that lately it's starting to change, because now people trying to put the seasonality on the top of the current price, thinking like, yeah, there we have the slowdown here based on the seasonality. It's like, okay, fine, you're gonna de-risk, or just trying to, not to, like long the market or whatever. And then from here, this couple months are good for seasonality. Is this when you take off? Well, then, if that's all is, well, then let's compare this. So this is the average from 1975 until this year, okay? Which shows what? Flat February, up March, down March, huge down March, down April. Second strongest month of the year was the April since the 75, and being down, and now we're up. You see? Well, how could you compare these 3 months? Here's no compare. Yeah, this makes sense. January, right? Not these 3 months. So I mean, I do. It's not like I'm gonna throw this thing out of the window, but it's just like we gotta watch everything. I mean, that's what we do. I mean, if we're gonna try to position something, we're gonna see like, okay, well, if we don't know if this thing is gonna play out, and what if it will? That's the question mark. So, so we know that what to look for.
Can you show a Netflix again?
Netflix is good. Netflix is the only one is up like almost 30% year to date. It's so damn expensive stock.
But isn't it too overbought now?
Yeah, I mean, stock is the second quarter. That's the one that's pulling up. The last quarter was flat. I mean, not flat, like 4.62%. It's just like, first of all, is Netflix is the business model. If you look at them, they have no impact on tariffs or whatever, right? And this is the one that leads in a case of a recession as well, right? Because people will stop spending money and this and that. They will be just like sitting home watching movies, right? So, so there's these are the benefits of Netflix, that any sort of like, I'm pretty sure like when COVID happened, Netflix was doing pretty good because everybody's home. What else they gonna do? Watch Disney movies for kids and watch Hunt Netflix, right? So it's just the way I think the stock is like, if the the recession is coming or if it's not coming, or I don't know what the case is. It's really annoying now. And then they just, with all these tariffs and stuff, I mean, what China has to do with Netflix? Nothing. So it's a little different story. Definitely about, and now if you compare Disney and if you look at Roku and all that, it's like garbage. This one is just taking over the entire world. Even the fact that Disney is just look at the size of a Disney with those theme parks and this and that. That's just like a struggling, dying business after 100 years. And well, materials, looks good. Healthcare looks decent. Down three. You gotta watch for those three. That's what I kind of these three numbers right there. You see this monthly. This. Just pay attention to these three. Because every time when you had three, you have a very good chance that next month is gonna you're gonna pop good. ETFs don't struggle that like three up, four up. So this is energy. Energy is all over the place. Energy is a mess. It is a mess. Trump just not gonna um and the energy to rally. He's all about drilling this and that, drill, baby, drill, whatever he says. And then with all the golf tournaments that he's doing in Mar-a-Lago, and all these Saudis are coming there as well. They're sponsoring those ones. So they're putting money over there. So he's not gonna, I wouldn't bet on energy. Energy is a good hedge in case of market rolled over and stuff, but it doesn't look like it. And even the fact that in 2022 bear market, um, energy was the only sector that was rallying, right? But now the energy was what took a dump right there. You look at the bar right there. Same thing with the rest of the market. That's what I'm saying. Just like then when at the same time when you look at the bond market was puking as well. So where would you run with the money? It's just like 15, 2,000 point drawdowns that you're seeing like Euro open. The market opened like 1,000 points lower. And VIX still didn't get up to that to those COVID. It was really funny. The not funny. That I was looking at like we went literally tested every indicator, okay, and the flush down on the market to the COVID levels, RSI reads, and any indicator you want to pull it up. But VIX didn't get to those COVID high of on print on the VIX. I managed to go up to like what 60 and then just backed off. Now back to 25. Well, the market didn't get to COVID lows, but I'm only comparing the indicator. If you look at the RSI read, okay, on S&P, it gives you the exact low of that COVID on the indicator. Okay, well, if that's the low, we shouldn't try to go long. What do you think? It's gonna go to zero? This is a struggling one. This sector is the one that look at this XLY for May. Horrible. And if you look at the if you look at the XLY sector, it's the weakest one out of all of them. A lot of them has turned positive. Energy is still down 4, technology is still down 6.8, and consumer discretionary is down 10. And I think we're gonna have a bounce this month was slightly positive, and then they have the same thing here, three here, three here. So, but at the same time, like I'm not like comparing this, but just to keep it something to keep an eye on. That consumer discretionary is one's going to be the weakest seasonality chart for the of this month. So which stocks do we have here? Amazon and Tesla. Which one is going to drive this thing up higher? Amazon. See, you have to look at all these things to make a bet. So like, I'm thinking about buying Amazon, but then just like, is Amazon really gonna pull off? Because I was really hoping that it's gonna pop really hard on earnings, but it didn't. Amazon is one of the stock in Mag 7. The swing is still down. Every other one stock is swing is up. Tesla, Microsoft, all the other stock, Meta, Netflix, all swings are up except for Amazon. Amazon is just like, I don't know. And now he's dumping shares on top of it. So we're gonna watch. I wouldn't. I would. I would. Meta is fine. Nvidia is good. We're gonna just position on those two, and then we're just gonna try to see if we can try to get it sort of like in and out on Tesla. Just to Tesla wave count is not for me right now, but just to focus on a shorter term swings, and just gonna hunt for other stocks in the meantime. Yeah, this sector is it has to Amazon has to do the work. Amazon has a lot of weight. It's almost 21%. Chipotle is not gonna move the sucker. Booking.com is not gonna move that much. They're still in the top 10, but not as big as Amazon. And Tesla makes it 15% of XLY. So it can help and drive the XLY higher. That will push some of those stocks up. The leaders has to move, not the slow ones. You gotta have to understand that concept. When you when a sector has to improve, you have to bet on the best ones, not the weak ones. Okay, the best ones up on especially the top leaders, they're the ones going to drive the sector higher. So that's going to be this is a tough consumer discretionary deficit is because of the recession and inflation. Because this is what all the retailer stores are. I haven't even looked at these XLY. These stocks are just a lot of them here. Like, oh boy, it's going down 47, 40, 33. Say Nike 22, SD 20, CarMax. Like this is all these stocks are down year to date. Hilton is down 2.5. Wynn Resort. I mean, the strongest one, Dollar General 19. What's going on here? I gotta change all this. And I don't know when did I change this. AutoZone, Domino's. Domino's gonna settle in the second swing. That'd be nice. I do. These are individual. I really don't need them because I scan all 500 anyway. So scanner does all the work. It's gonna narrow. It's gonna filter all the ones that I am interested in. I don't have to go through here to be honest. I had them before, but then later I just once I have figured out all the the scripts and stuff. I just run a scanner. I have a pretty powerful scanner. Um, I don't know. Going to the flat line here. But semis are still down 9.5. Um, Qs 4, transport 6, IWM still down 9. Dow is 2.93. This is the worst one. Second one is technology, and then the energy. The rest of them all up. Yeah, we gotta look into buy dips, man. That's the only way I see it. But plus, we have a higher monthly bar anyways, so now we're gonna get some couple down sessions, but we're gonna pick something for sure. We'll pick something. I mean, I'm making a case for. I mean, this is a like a flat or a complex or whatever the the case is. We can sit in a zero. I mean, it's fine, but doesn't mean it's gonna play out, or it might play out, it might don't play out. If it's gonna, I'm just thinking, like, I know some people are um they're calling as a bear market rally, like the same thing they did here. And I don't know. I mean, if you think, okay, that there's gonna be a slowdown plus the recession, you can consider this. A flat is an A, B, and then you're gonna have a sharp decline to the downside. That basically what it does is gives you the three-way move to to to, and then after that, it's just gonna stop everyone out because everybody now is the bull. Well, depends. They're trying to see like, okay, fine, the price is just rebounding. They're hoping for this V. Okay, this was the U, and this is what they're hoping for, thinking like, okay, we'll just make a sharp reward. This is where that bulls get punished. They just most people go long. Now they just tried. This is what is gonna pull the rug. A flat is a regular flat is basically is a. I mean, according to the book, it's a 90% retracement of your A wave. If it and then here you can make the case if you think if you have the gut feeling thinking like yeah there's going to be a recession is going to hit the market and slowdowns and the tariffs and all that kind of stuff at the same time they're trying to make the deal they're not going to make the deal what is going to be we don't know that we're going to find out if there's going to be a regular flat it goes right back to exact 48.39 okay so the two will come here so it'll be A B and C. Or the other thing, if it's going to turns into a irregular flag, which is called a running flat, it still goes back up to 90%. Not necessarily where it can fail. It can fail anywhere. Nobody knows these tops and bottoms. But we're going to watch this. That's all we'll be watching this closely to see what happens here. The regular one is this. Retest the lows. The running flat stops here. It doesn't go all the way back down. So you have an A, B, and C. Okay, it's called running flat. Running flat where the C isn't retraced below A wave low. And then from here, the running flat will go as again like this. It's a long way to go. Now the question is that people who are not in the market because they throw the towel, enough is enough. People who has took losses based on, you know, 10 straight days of weakness or whatever the case was. We're basically right back here to the flat line, right in the middle. Now I wouldn't say the flat line, or technically what 3% down for the year, and which was sitting right there from high, from peak to trough. So I was just like thinking, and I'm kind of, which way do we break? You know, because this is a half 50%. We already met that, right? So you take this decline, this is a 50% right there, which we all know. It's a halfway point. I mean, we're above the halfway mark. We're even above 61.8. So I laid this thing out here just like this, as you know, a little over a week ago when we were sitting here, that this is where the decision is going to get made. So now we're going to see what happens. So I'm gonna just leave this one the way it is. We don't have to do anything to it because first of all is a daily chart, 1 bar. So this wave count here, however, is gonna be, what we're gonna do is we simply gonna count our swing chart based on number of bars. Okay, so we're gonna leave the one it is. So same drill, 3 lower bars, swing is gonna turn down. It's not down, so I'm not gonna look down. When it will turn down, then we're going to look for a retracement. But then when the swing turns down, it doesn't instantly goes back up either. Keep that thing in mind as well. Okay. So we just gotta take it day by day from here. I mean, and just try to position from there. I'm gonna try to stay long. Signals are good, swing is up, we're gonna stay long. If we're gonna come back down, yeah, I mean, we'll deal with it. Nobody can catch every single move. I mean, if you stuck in ports, if you have enough time, I'm pretty sure you probably have sitting and praying that market can roll over any day so I can get out. Because being in that short for 9 days, that's a hard punishment, you know? Because market didn't even came down 9 straight days, you know? S&P goes down 4 straight days down. I mean, it's gonna be, the whole world is gonna get a panic attack. But interesting market, to be honest. All because of this. This. This is a one chart that you need to keep an eye on. Trump 1.1.0, COVID, Biden started here, left the office here, bear market, Trump came right here, 2.0, and now we're here. If I put a price tag on him, I don't know, whenever he's going to finish his term, I'll put a price tag at 74.59 because it's a very good chart. It's a weekly chart, so it's a week one, it's a weekly bars. So keep that thing in mind. And I mean, you could throw swings there, whatever. I mean, that's it doesn't. It's just a matter of like, where do we fail here to take another leg down, and then we go But looking at how 50%, 50% here, these are 50% from this low to this high. 50%, 3506. Look at the low, 35. I don't know what the low was. Sorry, 35 or 3505. God, I want to do this. 50. So 200 is here. Oh, yeah, it is a 50. So when I was looking, I was like, what the heck? The high is here. I'm going to move it around. Here. So you start and end. So the start is 4818. That's the high. And the low was 2191. That's the COVID low. 50% retracement is 3505. And the low here was 3491.58. This one right there, same high and low. Okay, I wish I could have figured that chart out, man. Ugh. Now, if you take the high here to this low, okay, we did this high to this low. Now we take the all-time high to the bear market low of Biden. 50% is this, 48.19. And we put a low at what? 4835.04. So we're up like 7, 8, like 8, 9 points. So what does that tell you? 200% bear market, 50%, 200% bear market, 50%. What do you think is going to happen? I think it's going to happen the same thing out of, unless we make a V or we make a U. Market is exactly doing the same, repeating the same pattern over and over again from the last 5 years, 4 years or so. Almost to the penny. Almost to the penny. I just hate myself, you know, that I would, if I knew, if I would have had this thing, man, I know 200%. It's just you're not gonna break that easily before any sort of a setback. It's a very strong fib after 161.8. So 3 versus 1. And then you have that 200 comes after that. You don't, mm, you're going to take a pause here before then you have that 261.8. Well, that's most of the time the story will end here. Yeah, you're going to reach this point. You're gonna, every indicator you're going to look, it's going to be completely overbought. But this is a, I know this, and it's okay. It's okay. Now we know. So
So talking about 261.8% fib extension, I
which
think
one?
Palantir, PLTR, isn't it approaching to 261.8? Or is it
My Palantir looks good. My, it's in a first swing now. Oh boy, what happened here? So it went up to the crazy 21 count before. And if you look at the price here, um, now it went up to one again. So you want to look at the upside. You can do a projection here, run this swing low to this high of 98.99 projected from this low swing. This your upside right here. So you have 131 and 142. That would be, this is the daily chart anyway, so it's going to take several days. So Palantir was up for 6 days. Put an outside bar here, number disappeared. Now we got 1, 2 again. So now we started. So it keep counting those higher bars. So this is the this is when the swing turns up or down. This is the arrow is gonna show. It's not a buy or sell signal. Keep that thing. Don't get that confused. The blue one right there is the go no go signal. This one, the blue ones. Um, See, this is where the swing turned down. So you had lower bar, inside bar, outside bar. Boom, the swing turned down. If I don't count the inside day, you see, that's what I'm telling you. Inside day, you have to just it's very um, you can easily count this to the upside before the two higher bars. This one right there, if you don't count, it changed the swing. If you do count, it goes either way. Because you see, like, even it, it gives you a breakout, which is fine. See, it doesn't have an option of an outside bar. It changes. I know that. It's very tricky with this inside sneaky neutral bar. Well, your upside is 131, 142. That's all it is. So as long as the swing is up, yeah, just look for that one. Um, I think run a scan and then I think we're gonna be done. Rest we can cover. This is the one we have. Okay, this it's a little it's a low ATR play though. Keep that thing in mind. This is not something that moves big time, but I like the technical setup. This is a pretty nice, if you want to label that thing, one sort of like a flat down into gonna come here. Then you got the one. Oh, it's a three swing, so you're gonna do WXY. Oh, this is a low. Sorry, this is the low, not this. So you got a 1, 2, 3, 4, 5. So up in five. This one right there does look like a wedge. And I'm really hoping that's the swing right there. So our swing low is 56. The swing turned up yesterday. Okay. Because now we have a three higher daily bars. So now what we're gonna do is we're gonna see how the Monday is gonna go, Tuesday, blah blah blah. We need to break above this previous swing high, which is 59.54. So mark this one on your chart, 59.54. This is the breakout that we need. We take out this previous swing high after now because we have a higher button. The swing is up now. Plus, it has this wedge, which is it's a bullish wedge. So if we take a wedge Now we have an upswing. So we'll see how it goes. So we might get the pop above this 59.54, and then from here we can target this previous swing high, 63.50. Okay, we're gonna do that. If the price does reverse back down, well, it will need 3 days, or it will take a one full complete flush out. It will change the swing right back down. You need to take out 3 days of lows on a one single day. You know what I mean? So meaning that you need a lower bar or an outside bar basically just to take out 3 previous day lows, and then it's going to turn right back down. But other than that, you need to count 3 more days for the swing to turn back down. So it's okay. It looks good. I like it. I hope it's good. We just need to break this, and then we can have some room to the upside. Um, let's run a scan. I don't know. Well, there's nothing on a mean dividend because the market has been rallying for 9 straight days. So there's no we can look for one. Might somebody got a beating or something. I was gonna do this thing yesterday. Huh. Clorox, I saw it last week as well. Oh, there's 5 stocks that triggered a mean reversion this week. Right there. BKR. Okay. Thank you, Jesh. Um, yeah, I'm almost done as, but just gonna run a scan just to see. I have them just to this is actually right in the middle. It's not bad. Let me do a volatility swing. That's a swing 8. Baker Hoops. Could be a low ATR play. There's my it moves 3 points. Not bad. That's a good one. There's a bleach right there. That's a 1-2 swing. That bleach might man, that's a nasty fade right there. That's not something would close somewhere near the highs of the last week. That's always a good sign. Yeah, I just faded. Clorox. It's another one. Wow. Eastman Chemical. I'm watching this one. I'm watching this one. Packaging. Inside wick. I'm not gonna touch that. This one is WI Warehouser. What is that? The water company or something? Oh, nice. That's a clear 5-way move to the upside. This is this is a corrected wave against this trend wave. Huge. $26 stock. 26.40. Wow. This is a clear five-way move. I can count this thing all day with my closed eyes. One here, two here, one, two, three, four, five, three. You got this. That's a five-way move against this. Where we have the initial decline. 24. We can use 15 or we can do 24. Either or. I have to see 24 is gonna right there. This low. See, it gives you this low. So if you want to do the first initial swing from here, that's gonna be so it's right at the now. Jeez, what's going on with this channel? There's ways to do it. You're gonna do this low or this low. If this low is gonna give you this low after that, and this one after that, you're just looking for that mean reversion. Didn't have any outside bars. This is a one that let me show you how I find a trade. It's a two higher bar and a three. Two higher bar. Let's see. 291 stocks. Okay, I'm gonna stop this recording.